All right. Good evening, everyone. Good evening. It is 7 p.m. on the East Coast. So I am really excited for the Trade Speakeasy to have Winston Buckley from Metarize join us this evening to talk about blockchain and, also to talk about crypto, really to focus on blockchain and some of the areas that we as investors or even those of us that are just in the space of economics to have a better understanding of what is going on in the space. And I've seen Winston present on some of our EYL conversations, and previously in the crypto club, and just he has like a really strong expertise in this area. And so I thought it would be great to have him on. And one of the things that Winston and I were chatting about before we all hopped on is, some of the areas that I have found to be really interesting is that, as we're looking at the entire economic field, let's say, and, we've had so many people at the macroeconomic level and analysts giving us so many different data points, and some are bearish, some are bullish, and then others we've already been in a recession, that we are in a recession, that we will get to a recession in the second half of the year or at the beginning of 2024. And people feel very frustrated and very confused. And of course, it's impossible then to balance a portfolio because you just feel like you don't have your finger on the pulse. And one of the things that has been really interesting is that normally, we would see when we're kind of hitting that bottom and we're coming out of a recession or coming out of a bear market, is that you get this kind of moment, especially in risk assets, where you see this capitulation, where people are just so frustrated by, how everything has been whiplashing here and there, that they just get to a point where they're like, you know what, I'd rather just sell everything and then wait for this to kind of round out a bottom, and then I'm going to lean back in and slowly scale back into my investments in equities. And the odd thing is that we haven't had a capitulation. So a lot of people are like, what did I miss the sign? Is this the end of the bear market? Are we just in a bear market rally? And one of the things that I found really, really interesting, and I've heard some other people talk about, is that, all of us were looking for a capitulation in the equities market, and we were looking for signs in the bond market. But because we haven't really been through a major recession besides COVID with cryptocurrencies, we might not have been looking in the right place for what capitulation would look like. And so one of the things that really had that true capitulatory feeling was in Bitcoin, when hash rates just dropped. And Winston and I were chatting about this before, and just the kind of the combination of credit risk. A lot of people had borrowed money to build out their farms, and of course, when the interest rates are starting to skyrocket, if you're not in some kind of fixed rate business loan, suddenly the cost of doing business can be it can be unprofitable. And of course, energy costs skyrocketed. In these colder climates here in Northern Europe, you would think that this would be a perfect place to be mining Bitcoin. But, we've had energy costs quadruple, in some areas go up 10 times. So, if you're doing a business that just is utilizing so much energy, you don't have a business plan for that. So, seeing that massive drop in the hash rate for Bitcoin might not have been the capitulatory moment for, wider markets. So I don't want anybody to extrapolate that from what I'm saying, but it could have been a very interesting moment for those that maybe had been overly exposed to garbage coins and really wanting to lean back into some of the more, stable areas of cryptocurrencies like Bitcoin or ethereum. That might have been kind of a moment for them. But all that to say is that, there's a much deeper relationship between macroeconomics, whether it's the liquidity cycle or energy costs and commodities, or just generally what the relationship is when inflation is high. Does something like Bitcoin track with the risk assets, where a lot of times they said, no, Bitcoin would be an inflationary hedge. And it wasn't necessarily that for a lot of people, depending on when you actually got into Bitcoin. So I think that, the relationship is massively connected, more so than maybe we understood or realized. But also blockchain is not just cryptocurrencies. And so, I don't want the whole conversation just to be dominated by that, even though with everything going on with FTX, that's been like the noisiest part of like the crypto space and even dominating conversations on blockchain. So I am going to let Winston share a little bit about himself, but then I'm going to let him just take it away because he knows this area better than I do. But I think that, for anybody that is focused on investing, you at least have to be abreast of this kind of conversation about what's going on in, in blockchain and in the crypto space. You can't just ignore it, even though many people have probably tried to for the last years. So I will pass the mic to you, sir.
Thank you, Susanna. That was very beautifully stated, how you describe what's going on with the hash rate, and definitely a metric that we need to look at. So yes, my name is Winston Buckley, and met Suzanne a few months back doing a crypto club, and she's heading up a stock and investing club. And we used to bounce some ideas around saying, hey, we need to do something together at some point. And here we are doing something together. So I'll give you all just a little background about myself before I start rambling on with this presentation here. But I was born and raised in New Orleans, Louisiana. Currently live in the Atlanta metro area. Been here since about 2000. I originally went to college at Georgia State for computer science, and then finally graduated with a degree in economics. Went on to banking for a little while, and I was doing some investing with the bank, did personal banking. So my first 6 years of real work were in the banking world, and I was licensed and sold insurance and all that good stuff. And excuse me, then moved on to work for a pension plan, a state pension plan for the state of Georgia. And just stumbled along the way into cryptocurrency in about 2017. And just like a lot of people, they saw all the noise around Bitcoin. There was a point in late 2017 where Bitcoin was at 1,000, and then it was 2,000, then the next week 4,000, and I was like, "What in the world is this? And where do I get some?" And just like a lot of other people, I started on Coinbase and bought some Bitcoin, and saw my Bitcoin go down by 75% in a few months after that. So holding this stuff, this funny money that I had, I was like, you know what? Let me figure out what it is. And I started to peel back layers and more layers. And it just pinged on my nerd side with my computer science background. And I used to do, I still do graphic design. So the NFT sector really drew my attention. And every time I peeled back another layer, I was like, wow, there's a lot more to it than meets the eye. And so here I am 6 years later, still down 75% in some aspects. So we'll see what it looks like for me 6 years from now, and if I'm even talking about this, but it kind of sums up my story and how I stumbled into blockchain and crypto. All right, so I will go ahead and start sharing my screen if that's all right with you, Suzanne.
Yep, go for it.
All right, I think I'll need to have permission to do so.
Is it allowing you now?
All right. Yep. Okay. So let me share my screen, and if you could give me a thumbs up if you see that.
Yep.
All right. All right. Good deal. So before I start, I just want to state a few things. So I am not I do not have this utopian view about blockchain and crypto. I don't think that blockchain and cryptocurrencies will save the world. I don't think that is going to totally transform the traditional finance system, as some will believe or some will let on to say. So my take on the crypto space, being in the crypto space, is a little different. So I'm not what some people call a maxi for short, a maximalist. So, I don't believe that this is the savior for world poverty or any of those things. Do I think that it can help in some cases? Yes. But I don't think that blockchain and crypto is the be all end all for all the world's problems. I do believe that there is a distinct difference that needs to be carved out between blockchain and cryptocurrencies, and I'll get into a little bit of that today. So without further ado, I titled this presentation, is crypto a big scam? Sometimes it is. So let's talk about that. So this is a disclaimer. I won't read all of it, but basically I'm not a financial advisor. The things that I state are my opinions only. So just make sure you do your own research. If you have a financial advisor, please seek that out. But this is for your education only. So let's talk about my monitors a little behind me. So if I'm looking off a bit, that's why. All right, so to the moon, that's what you heard in 2020 and 2021. To the moon, you couldn't turn around without seeing that somewhere on Twitter, on Instagram. To the moon, everybody was talking about to the moon, and you even seen people in the stock world adopt this terminology that came from the crypto world, to the moon. So, all right, you see, these are some of the headlines that you saw. Standard Charter, you would see some big names, some traditional investors saying just crazy things about Bitcoin. Tim Draper was saying $250,000 Bitcoin by the end of 2022, 100,000. Some people were saying 500,000, 1 million. It was really fun just hearing these headlines, holding these tokens from 2017 that lost me money. And now everybody's saying, these billionaires are coming out and saying, oh, we're going to see $1 million Bitcoin in a few years. And I was like, yes, I hit the lottery. I knew I wasn't crazy. I was telling everybody to buy Bitcoin. And then 2022 happened. So not to the moon. So some of the things that happened throughout that year, some good, a lot of good, and a lot of bad as well. And this timeline that TechCrunch provided is a really good one. Of course, it doesn't have all the things that happened, but some major events. And so on the top here, you'll see some of the green, which are the good things that happened. So like ConocoPhillips announces this Bitcoin mining project, also Exxon, Silvergate was getting all of this money. You probably have heard some things about Silvergate Bank and their stock just tanking now, but they were getting all of this money from all these different places because there was just a lot of money flowing in crypto. Obviously, the merge was the biggest news. Everybody was talking about the merge and what it was going to do, even though a lot of people didn't understand what it did. But the merge was just this really big event, and it went on without a hitch. But some of the negative things, and I'm going to start with this one that happened in about May, was the Terra Luna collapse. And this just got totally swallowed up by the FTX news by the end of the year. Now, even as bad as the Terra Luna collapse was, it didn't make a splash like SBF and FTX. But this is the thing that started the dominoes that led to the fall of FTX and SBF being Sam Bankman-Fried, SBF being exposed. So Terra had this stable coin, so UST, US Terra. They had the stable coin that was supposed to be pegged 1-to-1 to the dollar, and it was called an algorithmic stable coin. And so it was basically a stable coin that held a peg by code, but it lost its peg. Now, there's a lot of speculation as to why that happened. Some people believe that FTX actually attacked. Some people believe that it might have been the government. Some people believe that it might have been a large hedge fund, but it took a lot of money to destabilize this stable coin. But when that happened, 3 arrow commas, they went bankrupt. So they went kaput. So they had a lot of money in Terra Luna. And after that, Grayscale lost a lot of money because of Terra Luna. And all of these dominoes just fell one after another. And here comes November. FTX is looking a little shaky. And so that's when you started to hear the rumors, and Sam Bankman-Fried comes out and says, oh, nothing's going wrong. And then the next day, there's $8 billion that's missing. And so obviously from that, there was just capitulation after capitulation. And you've seen all these smaller firms and miners and companies and just retail investors just get wiped out. So that's kind of a nutshell of some of the larger things that happened. And so just like my story I talked about 2017 and my Bitcoin going down 75%, well, it happened again. And so all of last year was just a slow bleed and then a fast bleed starting in the summer. And so that's kind of where we are. Now, one of the things that Bitcoin likes, what all markets like, is a lot of money. So quantitative easing. So Bitcoin and crypto loves quantitative. I mean, it's who doesn't? Who doesn't like cheap, easy, free money? Who doesn't like that? And so when the announcement of quantitative tightening was released, you started to see things shake up quite a bit. So while this kind of coincides at the same time that there was this destabilization of the peg with UST, I find it a little more than coincidental. But this also led to just this downward spiral of the price of Bitcoin. But if you pair the Bitcoin chart, so this is going back from 2017 up to 2022, and just look at the money supply, and I drug it back a little further, but from 2006 to 2017 and then 2020, when we started getting stimulus package after stimulus package after stimulus package, kind of goes along with what you see here with the price action with Bitcoin. So again, crypto, these are risk on assets. So this is, a lot of this is very speculative. A lot of it is uncharted territory. It's the far end of the pool. So of course, Bitcoin is going to benefit from a lot of extra money in the market. This chart I just pulled from the Richmond Fed here in the States. So you see all of these periods here are basically quantitative easing. And there was a little bit in 2018 to 2020, same time frame when Bitcoin was going down. And then boom, stimulus package after stimulus package, a lot of quantitative easing. And you see the same price action there in Bitcoin itself. So from 2018 to 2020 is, kind of downward, sideways, but then boom. So these two charts, they just look eerily similar. And then also inflation. So Bitcoin likes low rates. And when we have higher rates, then you see the opposite, the inverse effect many times. So is Bitcoin and inflation hedged? Now, there's a lot of arguments around that. I won't go too far into that. I can say yes and no, and reasons why. And if we have time later on, maybe we can talk about that a little bit. But this chart I pulled from Shadow Stats, and it tracks both with the CPI that's stated by the Bureau of Labor Statistics charts. And then they also have this higher one here, which uses what I call the old school method of tracking inflation, and it still has housing costs and some other things that the Fed doesn't use anymore. So some will argue that the true rate of inflation here in the States is really a little bit over 15%, but that's neither here or there. And then I just wanted to pull this up as well. So personal savings rates. This chart up here just shows the personal savings rate here in the States from 2018 to 2022. And this coincides with the quantitative easing that we saw, and also the money supply. So all of that extra direct stimulus money that we got, of course, a lot of people were saving a lot of money. At the same time, a lot of people were investing a lot of money. So Bitcoin, again, it benefited from that. So what does all this have to do with Bitcoin and crypto and the downward spiral? Well, centralized finance is something that I want to spend a little bit of time on. This is a key piece of the puzzle. So one of the big narratives in the whole blockchain space is decentralization versus centralization. And so with centralized finance, what was happening in 2020 and 2021 was the fact that a lot of people had a lot of extra money. Of course, we were spending a lot of money. I'm here in Georgia, so Georgia shut down for about 3 weeks when the pandemic hit, but we opened right back up and everybody started spending money. But people also were saving, and you see these savings rates were about 1% negative, excuse me, 0.1%, 0.2%. I pulled this up. This was a high yield savings rate back in 2020, and it was at 1%. So people had all this extra money that they didn't have before, and they're like, man, I'm just getting 1%. But I heard about crypto. I heard about all this stuff that's going on in this crypto world, and income all of these centralized entities that were offering these rates that are out of this world. So we had Celsius offering up to 17% APY paid weekly, and Nexo 20% annually, and BlockFi had 8%, Gemini had 7%. So a lot of people were like, well, I can keep my money in my bank and get a few dollars a year, or I can put it into this thing I heard of called stablecoin. Is pegged 1-to-1 to the dollar, and I can get 20% on that. I mean, this is a no-brainer. I have all this extra money anyway. I'm just going to throw my money into crypto. And so a lot of people went into centralized entities that were unregulated unknowingly. Some of these centralized entities they were bold enough to say that they were FDIC insured, and some of them have paid fines as a result of that. So they would put little things that are terms and conditions that say you own all of your assets. But some were a little more truthful about it and said that, anything that you put in an earned platform is the assets of our company. But who reads their terms and conditions? And I know I don't do that very much. And I bring these up because I have actually lost to some of these centralized parties. And so in this world of blockchain and crypto, there's all this inherent risk. So I have my 401k and I have other investments. And I realize anything that I dip my toes in this crypto world is in the deep end of the swimming pool. So me being an educator, I'm like, I have to try a little bit of everything. If I'm going to be on the frontier of this movement, then let me put a little bit in BlockFi and Celsius and in these own forks that are giving me 60,000% in DeFi. So I tried a little bit in everything. And I can tell you that the average retail investor that didn't know anything about crypto, this was extremely misleading, because me with my 5 years in the space at the time fell for some of the things that these companies were putting out there. And it's not all their fault, but there was a lot of counterparty risk in the centralized entities. And here comes the shining knight of them all, Sam Bankman-Fried. So this guy was, and the jury's not out yet. Was he this criminal mastermind, or was he this guy that was over his head? But up to 2022, Sam Bankman-Fried was the man. I mean, he was doing everything right in crypto. There was nothing that he could do wrong, and everything that he touched was gold, and he definitely had the Midas touch. And there was just barrage of campaigns. I mean, you have Mr. Wonderful that is a spokesperson for your company. I mean, it just doesn't get me. What if I can't trust Mr. Wonderful from the Shark Tank? I mean, who can I trust? He had Tom Brady as one of the ambassadors, and Steph Curry. He bought it. I mean, he had the naming rights to an arena, Miami Heat Stadium. And look at these actors for these Super Bowl ads. You couldn't turn around without seeing FTX. I mean, everywhere. So he's just absolutely crushing it. And the platform was beautiful. So if anybody's familiar with FTX US or FTX outside of the States, the platform was extremely user-friendly. It was fast. It was based on Solana's blockchain. So it was lightning fast. There was all kind of derivatives and options trading and spot trading. I mean, anything that you basically can do on a sophisticated trading desk, you could do it in the crypto world on FTX. So, I mean, it was extremely sleek, extremely fast. And then he was in front of Congress all the time, submitting documents over and over. And I mean, he was very well connected. One of the things that I pointed out that he submitted to Congress was just talking about how the FTX risk management systems were much safer and more conservative than what is normally seen in the US derivatives market. So I mean, he was just wooing people left and right and making a lot of political donations. And then as the crypto market was falling, if you remember the chart I went over that just showed all the different capitulation events of 2022, he was buying some of these bankrupt centralized entities like Voyager. So he was saving the day. And some people were saying, you know, wow, is he the Warren Buffett of the crypto world? You know, he's the savior. He's propping everything up and is bold enough to be on panels to support things like the Digital Commodities Consumer Protection Act to regulate DeFi of all things. And DeFi is decentralized finance. So he heavily, well, he controlled a centralized entity, but he was pushing for regulation of decentralized finance because that's where all the bad actors are. So, you know, he's running all the circles and, you know, come to find out that he was scamming everybody. So he just, I mean, he tricked everybody. You had to really be on the inside to really know what was going on. So he went from being the darling of the space, being the Berkshire Hathaway owner of the space, the Warren Buffett, to now people are considering him the Bernie Madoff of the space and within a matter of months' time. And so, you know, you see these pieces like this where they say that it makes what Bernie was doing like just child's play. And in that same article, one statement that was made, and this pretty much sums up what people both inside and outside of the crypto space felt like the cryptocurrency world transformed into an even more corrupt and even more leveraged system than the one that it was attempting to replace. Now, I cannot disagree with that statement at all. You know, I swam on both sides of DeFi and centralized finance in the crypto world, and there was super leverage. I'm talking about crazy stuff, a bunch of lending. And for those of you that know that money is debt and debt's money, this was on steroids in the crypto world, both on the centralized and decentralized side. But largely what Sam Bankman-Fried was doing was taking customer deposits and leveraging that, making out new loans on both centralized platforms and decentralized platforms. So when I went through his portfolio, FTX and Alameda's portfolio, it kind of looked like mine. I mean, for the average degen in crypto, you just buy a little bit of everything. And that's what FTX was doing. They just bought a little bit of everything, but they did it with customer funds. And so centralization is the issue. Now, you know, he was so good, or I should say they, because it was not him acting alone, but they were good enough to woo in investors like Apple and Microsoft. And I mean, you had people that may or may not have been doing their due diligence, but have these sophisticated, you know, supposedly auditory firms or, you know, compliance desks, but a lot of people got duped in this. And there was a lot of things that he was able to hide. But the key point that I want to press is that this is an issue with centralization. So a lot of the scamming, a lot of the fraud, a lot of the leverage that happened with FTX and Alameda is the same stuff that happened in the 08-09 recession. A lot of centralization, a lot of leverage, a lot of derivatives of derivatives, packaging that, making it AAA. It's the same thing that happened in the crypto space. What happened, and one of the narratives that's still going on, is because people are, especially within the crypto world, have that lack of trust for the centralized entities. For many of them, you saw this big move into decentralization. And so these are a couple of tokens that represent decentralized entities. One is GMX, and you just seen the price action of GMX, and this is over 2022. So as Bitcoin is going the opposite direction, you've seen this uptrend into some of the DeFi tokens. And Trust Wallet token is another one. This is the token for a decentralized wallet. And you saw that a lot of people started to move their assets from centralized entities such as, I'll just throw some out there, Kraken and Voyager and BlockFi. The ones that could get their money out, they put it into decentralized wallets and also into cold storage. So you saw the likes of Trezor and Ledger and SafePal and all of these cold wallets. The price is still, to this day, they're seeing a lot of sales because people are not trusting centralized entities. So while some have just totally got out the space, those that want to stay are moving more towards self-custody and decentralized platforms. So now what? What are the narratives now? Where is the space going? Is it dead? Where is the good action? Where is the bad action? So where are we now? Well, regulation is coming. Regulation has existed, but not to the degree that it's going to be coming. So I'm certain I'll put some money on regulation that's coming this year. We're probably going to find out some cryptos that will be labeled as securities or commodities or property. And every country has its own set of rules, but we're going to see a lot of regulation. And I am one that believes that this is really good for the space. A lot of my crypto bros and sisters don't believe that. They're like, no, this is not supposed to be that. But the average person, even me that's been in the space for a while, we need regulation. This human beings are human beings, and people will exploit anything, no matter how good it is. So regulation is coming. Some of it's a little overboard, but a lot of it is needed. Privacy and identity. These are some, and I'm not endorsing these projects, but I just wanted to point out some projects that are focusing on privacy and identity on chain. So one of the themes in crypto is that anything that you do in decentralized finance and in crypto, then those things are anonymous. That is far from the truth. This is everything on chain is on chain. So when you have a wallet and you transact, and especially if you're buying something with crypto, people can see everything that you ever done. So imagine going to the grocery store and swiping your debit card, and now the grocery store knows everything that's in your bank account, every purchase you ever made, every direct deposit, and that's no good. That is no bueno. So what we need is decentralized privacy on chain, where you have an identity, but it doesn't track every single thing that you've done. So there are some projects that are working on keeping you anonymous on chain. Interoperability is the big thing. We all remember the tech. Well, some of you may be younger than me, but if you were around in 99 and 2000, we remember the tech bubble, and we saw everything become a .com. And just like now in crypto, the big thing is blockchain, blockchain, blockchain is going to save the world. And so a lot of blockchains are independent of each other. Those of you that got on the internet in the early days, you remember having to go through a gateway. So if you signed up through AOL, you had to sign on to AOL and then get into the internet, or you had to go through Netscape. So imagine having a Visa card and you can only use your Visa card at Chick-fil-A and Kroger. And imagine having a MasterCard and you can only use your MasterCard at Pizza Hut and Piggly Wiggly. We have Piggly Wigglies here in Georgia. That's a grocery store. So that doesn't work for the internet. That doesn't work for your credit cards. That doesn't work in blockchain either. So you're going to see more chains that work together. Proof of physical work is a big narrative in the space. So this is just an ecosystem of some projects that do proof of physical work. There are some examples like 5G low RAN stuff. So you can join the T-Mobile network to provide 5G and get paid in crypto. There are things like car miners where you can track your car's movement and you get paid in crypto. There's move to earn stuff where you can wear a wearable and you're sharing your data with medical firms and you get paid in crypto. So there's all these different things that are latching onto this Internet of Things movement and you using your resources. Kind of think of Airbnb for your computer. I'm going to share my unused space and my computing power to the network to do things like quantum computing and all that stuff. So y'all, that's my nerd side coming out. I hope I'm not talking crazy over anybody's head, but those are some of the things that are really hot. NFTs. So, NFTs were the big craze in 2020. You saw these crazy prices for these JPEGs, and I try to justify myself too. But I mean, at the end of the day, a lot of them are just pictures on a computer. So most of those are going to go to zero. There'll be a few that will hold some value, but most of them are going to go to zero. And Logan Paul talked about spending $623,000 back in 2020 for this Bumblebee JPEG that's worth almost nothing now. So, people were doing that, and that was all this extra money to do that. But what's interesting, the California Department of Motor Vehicles is actually using blockchain to put their titles on. So you'll start to see things like tags, titles, diplomas, degrees, your driver's licenses. ID 2020, that's the big push that they're doing. put your driver's license or your birth certificates on the blockchain, because blockchain is very hard to change. And once you put something on a blockchain, it takes a lot of power to change that. So you're starting to see NFTs being used that way. And then layer twos on top of Ethereum. Right now, Ethereum is where all the action is. It's just hard to argue with where the action is. If you do just a Google search on Polygon and partnerships, you'll see everything from Disney to on and on and on. So a lot of action on Polygon, Arbitrum, Optimism, a lot of layer twos that make really fast transactions on top of Ethereum. And then settlement of traditional currencies. So whether that's you're using the euro or the US dollar, this is where we're going to see governments really pile into blockchain. And so CBDCs, I have this chart from this graph here from the Atlantic Council, and it just shows where CBDCs are either being researched, where they're being piloted, or where they actually been launched. And there's 11 CBDC, centralized bank digital coins across the world. You're going to probably see one in the US eventually, or where you are in Europe or in Africa. We're going to have basically another form of the digital dollar. And so you're going to see that on blockchain. And that is pretty much it for the presentation. I did want to share some tools, Suzanne, but I can take a break for now if you want to do that and discuss some things before I show any tools, or I'll let you.
Yeah, no, go for it.
Okay. All right.
You're doing great. You're on fire. So
okay. All right. So what I wanted to share with you all is just some tools that you can use, because I know I went over a lot of information, especially in that last couple of minutes, just talking about the different projects and what they do. And some of these may be brand new to you. And I remember when I first got into this space, I mean, it was just a foreign language. I was like, there's so much stuff going on. I don't know what's a scam. I don't know what isn't. And so there are some pretty good resources that you can use. And let me toggle over to my screen here. Okay, so CoinMarketCap is one that most people have probably heard of, or have just kind of fell on or stumbled upon at some point if you wanted to research a crypto project. And it's one of the OG websites as far as tracking different tokens. There's CoinGecko as well. CoinMarketCap is owned by Binance. So if that's an issue for you, there's CoinGecko. There's some other ones as well. But this is pretty much one of the most reliable platforms that you're going to use to track markets. They have all different kind of categories, and they have educational components. So this is just a good way to look at different charts. And you can go in and you can look at the market cap over time. You can look at, there's trading view tools in there. It's not as robust as actually having a trading view account, but you can do quite a bit on CoinMarketCap itself. It has the actual contract. For anybody that's venturing into space, one thing that's really important for being space is using the actual website of the token. There's a lot of fake websites that will steal your wallet address and your private keys and all that sort of stuff. So going to CoinMarketCap will allow you to analyze, okay, what's the actual website? What are the actual socials? What is the actual contract for that token? Okay, I won't get into all that, but that is a really good resource to use. DApp Radar just shows a lot of the different decentralized apps. We call them dApps that's in the space. So you can see what are some of the most trending or the ones that have the most activity and volume. And there are some ones that you might want to try out. So you can see, where the action is for any particular time. They're sorted out by chain as well. So this is a good one just to kind of get lost in the space. Now, for those of you that are very visual, this is something called crypto bubbles. So you can sort by different categories, like the top 100. I tend to stick mostly in this area from an investment standpoint, but there are times where I might go down to the top 1,000 and, I'm looking for a gem that hasn't blown up yet, but you can see everything is green right now. And so green doesn't mean buy, people. This is anytime you're trying to get a feel for the market and you're seeing 300% up and 1,000% up, this is not the time to get FOMO and jump in the market. This might be the time to start taking some profits when you're seeing numbers like this. But this is a really good visual tool if you just need to kind of get a snapshot of what's going on. Now, I know y'all like to dig in the charts. So for those of you that need to see some statistics, Token Terminal has a lot of great stats and metrics that you can use. One of the most important things for any blockchain and its sustainability is the fees. What fees do they garner? So this is more than just blockchains. This is everything here, but the two parties that get the most fees are Ethereum. So it's not even close. Like nothing generates more fees than Ethereum. And then Uniswap is the number one app on Ethereum. And then OpenSea with NFTs, and you can just go down the line. So if you're looking for, okay, how do I even start to approach this space from a profitability standpoint? You know, which chains are most profitable? This is something that you can use. There's a bunch of other things in there as well, but I won't go into all of those. DeFi Llama is for decentralized finance, and it just sorts where the volume is and the total value lot for different blockchains and different projects. So this is a really good one to use. Now, DeFi, decentralized finance, is the far, and this is past the infinity pool and out in the ocean. So this is where everybody gets wrecked in decentralized finance. Just want to let you know. But you know, for those of us that really like that high risk, high reward, this is a good way to kind of get lost in that part of the space. Now, this one is I really like Sentiment. Sentiment has other charts that you can use. One of the greatest tools that you could ever use for any blockchain is to see where the developers are. If there are no developers or you have declining developers, then that blockchain is dying. So look at, yes, price action is very important, but you can scroll down on development activity and you can overlap it with any blockchain, and you can see that development activity, this purple line, kind of coincides many times with the price action for a blockchain. So if you see development action going down, developers are leaving that blockchain and going to another one. So that's kind of one that you can kind of use as a canary in a coal mine, so to speak. And lastly, there's a bunch of other tools. I can go on and on, but surprisingly, Twitter. Twitter is where all the alpha is dropped. The latest, I don't know how this happened, but Twitter became the place where the best news in crypto drops. It drops on Twitter before it hits anything else. So whenever there's a new testnet, whenever there's a new blockchain that's about to come on the scene, airdrops, it always hits Twitter first. And this is just where all of us nerds gravitated to for whatever reason. So this is one of the reasons that Twitter stayed alive is because of crypto. And, you know, like them, hate them or love them, you know, Elon is definitely he's put crypto kind of front and center with Twitter. So it's where all the action is. And so hopefully these are some of the tools that you can use to get a little more savvy in the space if you're interested, or maybe some of these things will make you just cut and run and go the other way. But either way, hopefully you have a little more information today than what you came with.
It was wonderful. That was such a clean presentation. I mean, you know, oftentimes when people want to present about crypto, there's just so much in the space that moves. And of course, there's been so much news and craziness that it's easy to get kind of like drug on, you know, rabbit trail. So thank you for that. I really appreciate it. I'm sure that those watching and later watching will also appreciate it. So one of the things actually was that this might be a perfect transition to the question is, so you're talking about the fees on Ethereum and the activity from developers. So, you know, there's been a lot of conversation over the last years, well, especially since the war in Ukraine, about, you know, the US dollar being the global currency. And of course, everything then that transpired with weaponizing the US dollar, the question of, you know, will the US dollar continue to be the global reserve currency? And the problem with gold is that there's such a finite amount and people can hoard it so easily, physical gold, that wonder if there's like, if there would actually ever be enough gold for that to be a true backer of other currencies. So like if China wanted gold to be, to have a gold standard, or somebody else wanted to have a gold standard, is there enough gold? And then the question, is presented, what about, cryptocurrencies? And so for a long time, the idea was that actually Bitcoin would be the most stable. But now I've actually started to hear people say, well, actually, if we want to talk about a currency, like a cryptocurrency that could actually be, like par with, a reserve currency, it might actually be Ethereum. And I was wondering what you thought about that, about just the concept of a cryptocurrency becoming a global currency or a world currency, in front of something like the euro or the dollar, or I mean, maybe not the dollar, but in front of the euro or another stable currency that's regarded as a top global currency.
Um, I know some of my crypto friends might get a little mad at me, but I personally believe no. Only because, okay, Ethereum is the main one right now. Even though most will say, Bitcoin is the OG. We know what Bitcoin does. It doesn't. It's complete. It doesn't have to be improved. And so, there's a whole narrative around Bitcoin being digital gold. It's slow. It's it's relatively volatile, but some will say, well, against the U.S. dollar, it's not as volatile. So I guess it depends on how you're looking at it. I don't necessarily think so, because right now there's a big fight within the Ethereum community. And so a lot of us know that Ethereum went through this merge went through a move from proof of work to proof of stake. And so basically relying on miners to create new Ethereum. And now we have proof of stake. So actually staking your tokens onto a chain to secure the network. And because of that, some people feel that it's more centralized than it was before. Now, those that say that it could be a global currency or a currency used by nations, well, they're like, well, just a nation just needs to buy as much Ethereum as possible and kind of control it that way. But within crypto, there's hard forks, and so chains can be spun off of chains if there's enough, and there's all these advances in quantum computing, and I hope I'm not going too far down the rabbit hole, but one of the things that makes a blockchain secure is its computing power, and it being decentralized and having all these different computers and nodes to decentralize the network. And so there's no central points of contact, central points of failure. But the proof of stake model presents this, I guess, maybe a vulnerability to the network, because now you are having this thing where certain companies or certain platforms have a bunch of Ethereum. And so it poses a risk, if a country can use its most powerful computers and possibly overthrow the Ethereum network. And I'm just talking possibilities. I know some people are probably going nuts right now that really know blockchain, especially Ethereum, and those that really believe in Ethereum. But I don't think that it's going to be the case, just because there's so many political factors that surround it. Has it originated in this country, and has it originated in that country? And some people are even talking about one of the founders' ethnicity. Okay, well, he's Russian, so is this a problem? And so there's these things where I don't think any one particular country will say, okay, we're going to use that, because they're like, well, I don't know what the founders' end goal is, and so that's one of the things that may pose a risk.
That makes sense. I mean, this would be an area where I would trust the experts. I was a bit surprised, to be honest. I mean, it's one thing when you talk about Bitcoin, I think just that it's been, that it has like just such a history, that to suggest that maybe that would be the next kind of gold standard, I guess, for the future. It didn't seem like the strangest thing you'd ever heard, but then I was a bit surprised to hear like experts in the field starting to shift towards that. Actually, maybe Ethereum would take that like front runner spot as being like the cryptocurrency of the gold standard. So I was a bit surprised. And now what you're saying also adds to the clarity. In this space, like if today, somebody's watching this and they're not already, involved in crypto and they're like, okay, I want to, start dipping my toes in. What would you recommend, like that they like, where do you recommend as a starting point? Because as I shared with you before, I had the benefit of working, in a teleradiology company where of my colleagues were really into this space. And so sometimes I feel like I didn't have that like starter block, like jumping off point, just because they were constantly talking about it. It was just so much a part of our like day-to-day work that, it was one of those things that maybe even though I was on the legal side and compliance and not at all on the tech side of the business, but just being around it all the time gave me a different starting point. Sometimes I don't know, like now with all of the change, like everything that's been going on the last year, like what's a good place to get people started from?
Yeah, one of the issues within the space is it not being easy for everybody. And so while those of us that are really in the space will say that you need to be decentralized and have self-custody all the way, I think that's where people need to end. But to start, a lot of times I recommend like Coinbase or Robinhood or Cash App. And while it's not is from a fee perspective or buying the like Bitcoin, for example, you're not going to get the best price, but it's something that people are familiar with. I think at this point, a lot of people are familiar with a Cash App or Robinhood or something similar in other countries, but it's a little difficult to expect the average person to remember the 12-word seed phrase and protect that and then get a VPN for their computer and make sure that they have a separate computer from their other one with this super strong antivirus software always running, and then getting a cold storage wallet to keep offline. There's all these different steps that you have to go down when you're talking about self-custody and really getting into that world. But I would say for the person that's just starting out, Coinbase, something or Binance might be a little more user friendly in other places of the world, but something that you have right on your phone that you can look at and you can just kind of get familiar with the price action and see how volatile it is, with really small amounts, with very small amounts. I have come to the place where I don't think everybody should be in the crypto space because it is, this is high risk on assets. So it's not for everybody. And a lot of people can't sleep at night knowing that, something could be down 50% the next day. But I would say start there and then read the Bitcoin white paper and just go on YouTube and just kind of get lost. So that's why I would say just start, and it can lead you either away from crypto altogether. You're like, you know what, these people are crazy, or you might fall in love with it. So that's what I would say.
Well, I know for the people that are in the Trade Speakeasy Telegram, they have direct access to you. So, anybody that's in our Telegram, you can, ask Winston any questions. He's there. I tagged him in our last post anyway. So he's at MetaRise in our Telegram group. So he's there. You can ask any follow-up questions. So if you're new to the space and, want to get safely off the starter blocks, we don't actually have Cash App in Germany. So I didn't realize that you could, I thought it was just like PayPal where you're just like sending cash. I realized you could actually have have cryptocurrencies on it. That's Interesting. I guess I never really thought about it, but people love Cash App so much. And now oh, well, that's another positive for Cash App that us in Europe, we don't, we don't have Cash App. So we
What's
would.
what would be something that's comparable to Cash App in
So,
Germany?
the thing is that because in the Eurozone, we can transfer kind of like Zelle, we can transfer to any other Euro account for free. So some of those like other apps are not as useful. And I think that in Europe, we also don't have as many unbanked communities because there's so many regional banks and you don't have like really tiny, completely isolated communities just because Europe is, I mean, size wise, it's not as, you don't have like just this expanding space like we do in the States. So, accessibility to banks is very different. So I think that the need for, like a multiplicity of, like, we have PayPal, but because it's so easy to transfer with banks, people just use their banks. And very, very early on, the postal service created their own online, like their own online bank, Post Bank. And I think that a lot of people that didn't actually have proper banks and only wanted to have like just the digital experience, they didn't need to go to physical bank, but they might use the post office, then that was like the perfect solution for them. But so yeah. So I didn't realize that you could use something like Cash App for cryptocurrency. So that's actually really great because it makes it so user friendly, like with a Robinhood. So that's a nice place to start for people. There was another question that I had now that I had for you. I've just forgotten it. So I'll remember in a second, I'm sure. It's like really just disappeared. So yeah, I mean, I'm sure that, so like I said, I'm sure that there will be other people that have questions, and people can also, go into, put a question in the comments if they would like any more specific information about like, about crypto. What would be like from your point of view right now, what do you find to be the most interesting like the most interesting thing that is happening in the space, or potential development or use case that maybe isn't getting attention, like people that aren't necessarily deep in crypto might not already know about?
It's one of the ones that doesn't get enough attention to me, I think, is so there's one cryptocurrency, which is Cardano. You might have heard of Cardano, but they're doing some things in some emerging markets, specifically in Africa. They're doing a lot of things with identification there. And also they have partnered with some insurance companies to insure crops and make some of the transactions on chain. So kind of add ledgers to some of the agriculture people in different regions. So I really like what's going on with both identity and insurances in some emerging markets. So that's kind of like the humanitarian stuff that's going on that doesn't get a lot of attention. Some people don't like it because, they say, well, these blockchain companies don't originate in some of these countries, and so that could be a problem because this chain is controlled outside the country for a country. But I think things like that can make some things more efficient for some countries are really good. But AI is the narrative everywhere right now. So there are some things that are happening with artificial intelligence and on chain with certain projects. So one that's kind of coming on the scene right now is with the healthcare sector, and you sharing your data willingly in order to be incentivized for it. So, right now, we know that our data is being, so as we're speaking, there's this metadata that's being farmed out and packaged And so, and one thing that's happening within the crypto space is, or the blockchain space, I should say, is the allowance of people to be incentivized for their own data. So there's browsers where you click on an ad and you get a little bit of crypto. There are kind of alternatives to YouTube where you watch videos and you get paid for your data. And the same thing is starting to happen with your medical data. So you might, like with your Apple Watch, if you have an Apple Watch or a Samsung Watch, right now that data is being farmed and, they're getting paid off of that. But the idea is for you to have a wearable and for you to opt in and say, yes, I don't mind this being used for research or whatever else. But in the meantime, I'm getting paid for that. So those are some of the things that I'm getting really excited about. And just, I don't know, it does it bring us to this dystopian society. Some people are saying this is going to be the thing that's going to usher in the mark of the beast, and we're all going to be under this one new world order. Maybe it is, but I am kind of excited to see where it's going to go.
Yeah, I mean, I remember mentioning to you, it's one of our conversations that, one of the things that, like, when I was working and, the gentlemen were constantly talking about blockchain and cryptocurrencies and so forth. One of the things that, because I worked for so long in the humanitarian sector, is that we actually started using blockchain to support our analysis for efficiency for food items. So working with local grocers instead of having people come into like the UNHCR or Caritas or to the different distribution centers to pick up groceries, actually partnering with the local grocers so that people were using their whatever support they were receiving from either the UN or from other humanitarian organizations, that all the data was pooled, and then we could actually make sure that the right supplies were there instead of having like a glut of oversupply and then undersupply in other areas. And it was amazing to me, actually, the amount of research support it gave us, because we started to then see, use that data for finding out other trends. And so all that to say, I think there are a lot of uses for blockchain that often people don't necessarily realize are out there, and that it's actually has this really strong positive improvement in our life beyond just, oh, this is a new way to get into like super risky assets that could maybe make me a millionaire or maybe make me lose all my money or get me involved in a scam. But actually there's a lot more, there's a robustness to blockchain that, I don't know if that's always at the forefront of the conversation, because then you end up with these FTX nonsense, and that's like the whole conversation for months and months and months, why is Bitcoin going down? And it's, was it the inflation hedge? It wasn't the inflation hedge. And it just dominates the whole conversation, that you never get to the point that you see those other corners. So I think that's that is extremely interesting. And I think that there'll be people that listen later that will be interested to know more. So I want to respect your time, and I thank you so much for joining us. And I do hope that we will have you back sooner than later. But as I said, for those who are watching now or watching later, you're in the Trade Speakeasy Telegram. You can reach out. Winston's there, and he's super, as you can tell from his personality, super easygoing. He wants to help you guys and to educate you guys, help us move forward. But you can also check out his website, Metarize, and they have, different training sessions. They also have their own YouTube channel, and they also do have a show with another crypto channel that is also great and provides a lot of helpful and useful information, great conversation. So if that's something that's interesting to you, then please go check them out, the website, the YouTube channel. And if you want more one-on-one time, they do also offer that, some one-on-one support. If you are trying to figure out like how deep do you want to get into this space? Do you want to have your cold wallet, or do you just want to be on Robinhood, where to focus your time and energy? You guys can also, reach out to them directly. So again, Winston, thank you so much for your time. And the presentation was wonderful. I think that you really, for those who might not have already had embraced the space, you presented it in a way that was manageable to digest. So I think that it, causes more curiosity than fear and trepidation. With the news the last couple of months and the last year probably are the feelings that have consumed more people than curiosity and hope and and eagerness to learn more. So thank you for your time.
Oh, you're very welcome. Yeah, this is fun. I love talking about this stuff. So yeah, anytime I'll be checking the Telegram and I'll be looking out. But yeah, hopefully I can come back and ramble on some more about this stuff.
All right. So for those who are watching, thank you guys so much for your time and thank you for joining us. If you are not in the Telegram, feel free to join our newsletter at tradespeakeasy.com. And there you'll hear about, you'll get access to the Telegram, but you'll also hear about any upcoming events like this. And later in the month, we will be having sessions on 101 charting and trying to help you guys really focus on your charting activities and increasing your ability to see chart patterns as they form, so that, now we're in a very critical turning point in the markets. We're at some really key levels in both the NASDAQ and the S&P 500. And that's really going to determine if we are really moving beyond this bear market or if this is just another bear market rally. So we want to really make sure that you're able to visualize on whatever underlines you are focused on trading or investing in, that you are getting in at really good entries. And also if things are turning around, that you're able with conviction to decide that no, this chart pattern isn't forming as I had suspected. And so I'm going to step out before I start compounding some significant losses. So at the end of the month, we will have 2 Tuesday sessions, 7 p.m. EST, but you do need to sign up because that will be a members only activity. So you do need to sign up to the newsletter so that you can get the updates. So, all right. So I will bid you guys good evening and thank you. Thank you again, Winston. Thank you to those who are viewing with us. I hope you guys have a wonderful Saturday evening and a wonderful weekend. Bye for now.